What's going on? It's Joshua Smith here with the Home Agent Group. Today we're going to do a market report. I've got a few listings on the market right now, not a whole lot of activity. I've been curious about mortgage applications. I've been curious about what other listings are doing on the market. So let's take a look today. Let's figure out what's been happening on the market. It's right at the end of February. We just got 1 week left. What are the next couple of months going to look like? If you're looking for content like this, we do stuff like this all the time on this channel. Please hit that like button, hit the subscribe button. Let's dive right into this market report in February 2025. What's up? My name is Joshua Smith. I'm with the Home Agent Group. I want to talk to you about what you're up to and how we can expand together.
I'm gonna be honest with you, and you can cut this if you need to.
That was the highlight of our entire trip.
Cheers. All right, so I've got RealTrax pulled up here. RealTrax is our MLS here in the Middle Tennessee area. First thing that we're gonna look at is new listings. Who's listing their house on the market right now? And compare that to the last couple of years. If I look at the last 3 years, you see these sort of natural humps. Every time I do a market report, this is exactly what you see. And that's because we have a pretty steady regular trend. Over the last couple of years, we've seen some unseasonal dips. This is back in 2023. If you look back at last year, there was a more regular or consistent rate of inventory coming on the market, which is always good to see. People willing to sell, meeting buyer needs, meeting those supply and demand where they line up, right? Looking at December 2024, there was a big drop. It wasn't necessarily any more significant than the drop of the year before. And in fact, both of the last 2 years, inventory was up from 2022. So that's good. Also a big increase going into January, the last couple of years. It was the same thing for this year. And in fact, I think that we're going to see, just like we saw last year, a little bit of a bump in February. I personally feel like I've seen a lot more listings come on the market in the last month. So that's a good sign, and it means that it's indicative that this year is probably going to see some of these same kinds of jumps leading into the summer. That's what we hope. I'm going to go ahead and bump this back to 5 years, just so you can kind of see when things were really hot back in 2020, even then, 2021, even then we weren't seeing such crazy spikes as we saw in 22 and 20. So it's really hard to tell year over year what's going to happen. Nobody's got a crystal ball and nobody can tell you exactly, what the future's going to look like. But that's why I like to just kind of focus on a specific time period and just do what we can do to compare. Let's look at new under contract as compared to these new listings. Obviously, not as many homes are going under contract as those that are coming on the market. But what we do see here, last year there was a lot less homes that went under contract compared to the homes that were listed than the year before. These trends sort of follow one another a little bit more consistently in 22 and 23. In 24, there became a much larger gap between homes under contract and homes that were coming on the market. It was a much slower paced year than I've seen here since 2019. I do think that we're going to see a good, healthy trend, like I said, in these coming months, because that's kind of what it looks like. If we've got a good jump from January to February, February to March, then we're pretty much in good shape for the next couple of months. We can only hope. There's a lot of unpredictable things happening in the world right now. Let's also compare this to closings. Looking at closings. See how these cross over. What you want to look for in this line, this green line, should trail right behind the red line timing wise. Looks like they're a little bit more lined up back in 22, but in 2023, that's kind of what we see. Now these closings taking a dip right here, that just means probably that you had a lot more long-term closing dates, right? So maybe people had to figure out the financing during the closing prior to closing on a deal, kept the contract in place. There was a big jump in that, and these lines do get a little bit more in sync here as the months go on. But this is also a big PCI time of year. So for military, or PCS, I mean. So for military, there's a lot of people moving and changing and relocating during these early months of the year. Right now, March through April. All right, so let's keep going. Now, these numbers right here, crisscrossing again, is basically what you saw from December to January of last year. The numbers were a little bit more extreme. We definitely had less closings in January than we have had. Did we have 457, 453? So no, not necessarily. We're up still from 2023, which is good. That's good. All right, so let's look at canceled and expired. So these lines going up just a little bit year over year, that's where I start to feel concern myself, especially when you've got your canceled listings going over the new and under contract listings, right? Canceled is at 462, whereas new under contract was at 439. So what that means is that more properties are canceling than are going under contract. Not necessarily a great thing, not a good sign, but these numbers getting a little bit more scattered, more of these contracts activating and binding in the month of January. Definitely a good thing. I would say if I look back at these trends, this is really consistent with what I saw on market last year. I don't think that we're gonna have another year like this. I'm gonna jump over to mortgage rates here in just a second, just to show you kind of what these trends look like over the last couple of years and how they follow mortgage rates, because you can see a pretty direct line from rate and applications to properties going under contract, because that's what's indicative of who's in the market buying homes. So let's go ahead and jump over here. This is just what's happening on the market right now. I do see a lot more active listings. I do see more under contract this time of year than last year. So those are good signs for market activity and for what the market is and we can expect should be doing. Now let's look at mortgage applications. At this rate, we're down from where we were last year. Okay, so here's 5 years. This is where we saw a ton. The composite index is just, how many people are buying homes and putting these applications to use. But you had the rate obviously indicative of a large jump in purchasing over the course of 21, 22, 23. As the rate kind of grew, we started to see a lot less active. And then as the rate came down, we saw a lot more active purchases happening. So I'm seeing this index as of, if I go back to this 1 year mark, as of December 23rd, 2024, so this is a couple months behind, I'm definitely seeing good activity in terms of how these rates happen. What's interesting though is, like, even as this rate comes up, it's not a moment to moment trend where you can trace that these purchases are happening directly in line with the rate change. In fact, if you look at this a little bit closer, and I don't have the chart in front of me right now, but if you look at it a little bit closer, these rates, as they move, applications tend to slow down, right? So as this rate changes, continues to change and bounces around like this. That's where we're going to see a lot less applications, and that's where we're going to see closings sort of waver. And I think that's why last year you saw, as this kind of dropped way, this rate dropped way down, we saw some purchasing happening. But actually, if you remember, if you go back and look at September, it stayed pretty consistent, but it dropped way off right after September. Let's see. Yeah, so that's not as consistent with this composite line as it is with the rate line. So I think in our market, people are a lot more affected by these rates in terms of their purchasing power. Let's go ahead and pull down here to purchase index versus 30-year fixed, right? So this is how many people are purchasing. This is a national average. So yeah, so I am seeing, as these rates kind of go up and go down, I would expect to see more of the same. It feels like in January definitely had a big drop. February it started to come back up. If this rate continues to trend downward, and if we look at this on a 5-year timeline, you can see it sort of flows like a stock index chart. Often when you see 2 dips in a row, you're going to see a spike. So 2 dips, spike, it's coming back down. 1, 2, came back up, but not that much. So we might see it come back up just a little bit again, but then I feel like we will see it hopefully trail downward over a couple of months leading into the summer. I don't know if that's actually true or not, but those are some of the indicators that I've been taught to look for in terms of looking at these index charts. So just going back and looking over here at this market activity, let me also look at showings. So they're only tracking showings from when, this is just RealTor's showings, but these are showings that have been scheduled. Big drop off in December, just not that many people actually going out and looking at homes. But again, people were getting back out in January, and I'm seeing them go back out a lot more in February. I do think this is going to continue to go up, and hopefully we will have a year similar to 2023 when we saw a big peak in April, another big peak here in March. It started to drop off in April. That's when rates, I think, started to kick back up. So it does look like our market trends according to these rates. So if the rates continue to sort of go down, and even if they stabilize for a while, I think that we are going to see more mortgage applications, more buyers in the market. That's going to be better for sellers. And overall, it's going to be better for our market and home values and everything else in general. For right now, if you're on the market and you're not getting any showings, don't freak out, because it just looks like there's not a whole lot of people actually out there looking right now. That's probably because of many various degrees of uncertainty about different things as it relates to life and buying a home. What's it going to look like this summer? If that's what you're looking for, I would say just keep paying attention. If you're selling a house, be patient. Let it live. Days on market are probably going to be a little bit longer. I wouldn't make any sudden changes to your listing, to what you're offering people, to your concessions. You don't want to give away the horse before you've sold the cart. You know what I mean? So it's important to just stay consistent and be patient. This is a kind of a weird market right now, I have to say. But that being said, it looks promising to me. It looks like it will warm up in the springtime. That's what I'm hoping. I'm sure that's what you're hoping as well. I'm also hoping that rates are going to come down and we're going to see positive changes in all those directions. So stay tuned. We'll do another market report next month. And be sure to like, subscribe, leave a comment below. Let me know what you think. So let me know what these numbers mean to you. I'd love your interpretation as well. I'll see you in the next one.